Thanks, Rod, and appreciate your group for helping me out. I have a lot to say. That's all good. My experience so far with your team has been it's been streamlined, it's been easy, it's very consistent, which is what I like. You have a great track record. Your guys are honest. Uh, Talk to Buck Joffrey a bit about you and other people that I hang with, and we discuss different things. And so love the strategy. George Antone is a big proponent of the strategy that I want to talk about, and a couple of people that I hang with too as well. The biggest thing that I would say how I use the strategy that you guys provide is one of the biggest things I think people are lacking today is multiple streams of income. And really on top of that is freedom. And really everyone's looking for freedom. And I talk about these freedoms, but financially, you got to get financially there first. And then you can incorporate physical, relational, spiritual, different kinds of freedom. And basically be able to go where you want, when you want, with whom you want. And I think we're losing that entrepreneurial spirit as we get generations, down the road. So what I like about this strategy is, and it's pretty, I'm amazed, it's a little known strategy for how the group I talk to, I call it, my last name's Jim, it's Rachor, but I'm Jim Rachor, and I'm a dentist from Michigan. My father was a financial advisor here in Michigan for about 50 years, mostly in the market, and did real well up until about '08 or so, and still have done well. But a lot of the laws change as far as what's insider trading, what's not insider trading, what kind of money manager really get, can you buy a stock, can it buy a value add stock, that kind of thing. What I like about the insurance industry is they've kind of kept this thing for several hundred years, kind of rock solid. What I like about the strategy that I use with your group is you can apply for a life insurance policy specifically created for this overfunding type of a plan. And specifically, let's say you overfund your plan for $50,000, and you can take a collateralized loan against the insurance company, and then go ahead and deploy that. And how that works for me is, and I really kind of copied it from the Rockefellers, is you can take money that you have, you can overfund a policy, that money compounds inside of the policy. The payback of the interest is what's called a simple interest payback. So there's a little arbitrage there. On the other side of that, you can take that collateralized loan, most of that, take that and put it into a lending deal or a real estate deal. And in my world, that's very easy to do, to get 10, 12, 20% on a deal. So what I love about this concept is I can get my money compounding in two places at one time, pretty safe, collateralized by real estate on one side and inside of the policy on the other. Once you kind of wash your money through the policy, what you get in effect is you get a liability protected hedge to it. There's no credit reports. There's no 1099s with these loan policies. There's no real taxation. I can buy and sell the policy. It's a great legacy hedge. And so I use it in our family office. So we have the Rachor family office, and I have 7 kids. And what we do is generally the beneficiary will end up being our Rachor family office LLC. And that in effect is our family bank. And it will be replenished over the years by people that die, but also at the same time, we're using that money to compound it in other real estate deals or lending deals. What's interesting too is if you have a CPA that's not just a bookkeeper, not just a tax person, but a tax strategist, you can look at the collateralized loan and look at the interest tax hedge on the interest on the loan. The other part is it's really tricky, it seems like, for them to figure out how to way to tax the earned income on the debt that's in another deal. It's kind of interesting. It's almost a wash. So there's a little bit of a tax hedge there that you don't get in an IRA or other deals out there. What I really like about this too is it blends right into our strategy for our family office, and we can kind of mitigate taxes, preserve principal, hedge inflation with the same funds in the alternative assets that we deploy this money into. I love to compare this though, really, to people that are real proponents of, let's say, an IRA, and where you have a minimum amount you can take out. There's penalties, there's taxation. If it's a traditional IRA, there's a big giant bolus of taxation on the back end. I think using this strategy as your IRA might be what some people might want to start looking towards, especially now in what's going to be an imminent correction, in my opinion, and maybe even a down market or a hyper inflated market, where you if you can super stack your lending or your investments and mitigate taxes at the same time, I think your ROI will be through the roof. So I'm thinking more also about generation 2, generation 3, generation 4, and using this as one of our strategies to increase our assets and our wealth. Big proponent also in wealth strategies that can teach our children strategies. And I think that's a thing we're missing right now is the financial acumen of our children is not where it's supposed to be. So it's a great way to bring the older kids alongside, teach them another strategy, and have them partake in deploying it, looking at investments, and looking at the future, as opposed to just kind of trading time for dollars, which is what most people are doing. So that's what I would say. I love you guys. I appreciate you guys letting me ask all my questions when I email you. I've always got a great response. And you've always been quite honest with me too. And I love how you're up on top of everything too. So thank you very much for all you've done for me and my family. Thanks, Rod.